All right, good afternoon. Welcome to the weekly take on the market. It's Friday, April 11th, 1:05 Pacific time. I will be your host. My name is Scott St. Clair, manager of the Premium Product Group here at Investors Business Daily. Please take a moment to read the disclaimer. You know the drill with this. Okay, so we will go indices. I'm going to skip industry groups. A couple stocks. We'll talk about some stocks. Quarter of the week. It's been a crazy week in the market. Mostly a week where you probably should just have, stayed away. I think it's okay to be a little bit engaged. I am, but the volatility is pretty tough, so it's hard to manage your risk. And I've been working on this short selling program that we've got going on tomorrow, this weekend. So I haven't been doing a whole lot in the market. So we'll have to see how this video goes. I don't really have a whole lot. I considered not doing the video actually, but it's been, with the week that occurred, the action, I thought, it's probably best to, I'm either going to answer a bunch of emails on why I didn't do the video, or I'm going to do the video. It seemed easier to do the video. All right. So the Fear and Greed Index, I don't remember what day I pulled this. Here it is, April 8th. But this is my, the day before it was even worse at 4. So no surprise, sentiment is super extreme, skewed negatively. And that's what happens, right? Is prices go down, people become more bearish, and vice versa. It's just kind of the natural human psychology of markets. I saw this daily shot screenshot today, which is very interesting. Going now, all these numbers always seem to get larger anyways, so I don't know if you want to compare it to 2015, but you can see like some of the spikes in 2020, 21, but it's just off the charts. The amount of flows into, I assume this is the SQQQ ticker. So, and I see it a lot on IB Live. Like when the market breaks bad, a lot of people say, well, should I be buying SQQ as a hedge? And, maybe that works for a day or 2 or 3, rarely 3, I think. But mostly you should have the hedge on kind of before that happens if you're thinking about hedging. And then when it breaks really bad, like it's done, then you take the hedge off. That's what the hedge is for. It's insurance, so to speak. I don't really hedge much. I speculate on the short side. So if I think prices are going down, I'll be short. And if I think prices are going up, I'll be long. And sometimes I can think both. I can think XYZ is going up and ABC is going down. And so then I just do both. I rarely hedge. If I don't like my position, I just will reduce it or get out. So if I have too much of XYZ, I'm not going to buy the QQQ short to offset my NVIDIA long or something like that. I'm just going to reduce the NVIDIA. If I have 1,000 shares, I just go down to 800. If that doesn't feel right, I'll go down to 600. If that doesn't feel right, I'll go down to 400. I like that strategy better than hedging, because hedging, now you have 2 problems. You have to cover the hedge. Now, and sometimes maybe the hedge is working so well, maybe I need to get out of the long. You get out of some of the long, and then the market reverses on a Trump social media post, and now you just get caught off guard and unbalanced, and it's very frustrating if you get caught like that. So it just feels like the market is what's the right word for how I feel about the market right here? I know, I think I know the phrase. It's too early to be really, really long, and too heavy to be, too late to be really, really short. Right as we sit here now, I really think the market's going to rally. Now, I don't know if that's a real rally or a short covering rally to set up to sell into. I just don't know. I'm open to anything here. The market's gotten beat up pretty bad, so it's possible it could go up for a number of weeks to months. that would be a kind of a natural reaction breather, even if this was going to be a long bear market. So let's pull up the indexes. I think that's my last slide. And I will turn my camera off so you can see the chart better. So here's the NASDAQ. See, you're kind of in a waterfall decline. See, that's when you want to be short or hedged, and you want to cover into the waterfall decline. Even if you covered a day too soon, it's turned out to be a really good cover. I mean, even if you covered 2 days too soon, the prices are higher as of today. So you just want to be covering your shorts into that. Today was a strong day. I know last night the market was down a lot. So actually today was a much stronger day on the surface than it looked. Because like if you included the futures, I think the NASDAQ was down like 2% last night. So it had a pretty good rally off the lows. I don't think it's going to be a fall through day. The volume it was not going to catch up is my guess. And it would be a very kind of unorthodox fall through day, like an inside day is not usually a fall through day. Is this an inside day? It's not really an inside day. I apologize because it is outside that range yesterday, but it's inside this really big bar here. So you got this really crazy day on the social media post, and then now you're just going to consolidate. This is probably what's going to go on. Something similar to like that. It's usually what happens when you get a really big update. Now, really big updates are not bullish historically. The top 10 biggest updates in NASDAQ history are all bear market days. So I'm not really a big fan from the long thinking as a bull, let's say. This isn't good. You want strong days, but not that type of strong. Usually that type of strong occurs in a bear market. And I think the number I saw was like sometime in October, was it, of 2008 was so this is, let's see what this day is right here. Up 11%. So this is in the teeth of a really bad bear market, and you get NASDAQ up 11%, and you can kind of see what happens, right? We ended up undercutting all of that. And so that would be my fear. And my headset, I just got a message that my battery is low. So bear with me. I'm going to plug it in. Testing. Okay. All right. So big day, test of the lows. And I guess if we fast forward, I think ultimately it ended up going lower. So here's that big day, right? So you undercut the low, you rally, you undercut the low, you rally, and you can, oops, 3/3/2009. Come on. I don't know if you quite undercut that low. I think you hold that low. Oh no, you do. You undercut the low again, and I think that was the ultimate low. So, you're at the amusement park and it says you are here. I don't know if that's the case. Oh, the you are here right there is possible. I'm open to it, but who knows? So, but this is how bear markets are resolved, kind of, in waves. So this is a really, really bad bear market. So there's one wave sideways, two waves sideways. If you look at the weekly, you can see you've got 1, 2. I mean, that's enough, right? Or is this 1, 2, 3? It's probably more more realistic. 1, 2, 3 before it. But you can see also within the there's a wave within a wave, right? So there's this wave down, then there's that wave 2, and then this wave 3, something like that. And it's all, but as we sit here today, so 1, 2 short term, or is this all part of one big wave? What's the rally there? 17 to, I don't, it all kind of depends on how big the rally is and how long it goes for. It's roughly 1,000 points. 6%. It's not really much of a rally. 6% in about 7 or 8 days. So maybe that's wave 1. I don't know. It's kind of hard to know. Again, you just day by day. Just take it day by day. And for whatever it's worth, as I sit here today, I've got a couple of longs. I've got a single short. I'm still short Tesla with some of these ETFs. They have so many ETFs for Tesla. It's crazy. A bear yield one, triple inverse, double inverse, et cetera, et cetera. And I'm long a couple of stocks, and I am long the market, the NASDAQ as a whole. But I just don't have a lot of exposure, enough that I'm observant, getting feedback, but not enough that if I'm wrong, I'm going to get run over. But if I'm right, I'm not going to make a ton either, which is fine. So that's the NASDAQ. S&P was up 1.87%. So ideally, we'd get some kind of divergence. That would be my favorite. I would love for like this to make a new low and the NASDAQ not to, and then you get a fall through day. But part of the fall through days, and I talked about it last video, I think, with the Chipotle, is stocks to buy. And there was nothing to buy properly here. Is there anything to buy properly here? Not really. Although it's getting better. The stocks are starting to show up. So from an orthodox standpoint, just wait for a follow through day. If that's how it's probably the right way to do it. If you're like me, you're always probing, looking for stuff. I don't. One thing that Scott O'Neill said about his dad, Bill, that really kind of resonated with me one time was he said, my dad rarely gets out of the market completely. He's almost always probing, looking for where the strength is. And I thought that was very interesting because I used to be like an all or nothing, bull market, all in, bear market, all out. And so I like that strategy a lot. So I always like to have something on, right or wrong. It's usually I have something on. And I like to almost always have 98% of the time I want something on the long side, maybe 35% of the time I want something on the short side, just to kind of give me feedback. And that's kind of where I'm at right now. Gold is acting great. So they tried to sell it off and wow, it really jammed back. AEM, what a move off the 50-day. That's that one hurts. Should have bought that off the 50-day. 100 to 117 in 4 sessions. So gold stocks are acting really, really well. It's kind of the leading group. Bitcoin. So I don't know. I wouldn't want to be short that. That looks like something that's tired of going down, right? Tried to go down, couldn't. Made a new low, couldn't. Stay down. You got it looks like about 4 weeks tight right there. I don't really have a kind of a idea on what to do with the whole Bitcoin thing, but that just to be an observant, that looks pretty strong. Bitcoin, so and world markets. I know Argentina had quite a day today and a really good week, right? Coming off the the 40-week line. China, I just, it's a problem with China. I mean, that looks pretty good, but then you had the whole thing where they're going to, Trump is considering delisting the stocks, and that's just a whole headache that I just wouldn't want to deal with. It's probably an irrational fear, but it happened with the Russian stocks a handful of years ago. They got delisted, and they're just still delisted. So I moved on from that. Unfortunately, it's just Chinese trade is just was so hard. It was so good for it. It's good for these short bursts, and then it gave back the entire move. So I don't know what to make of that. I've moved on. I don't have any interest in that as we speak. What else is out there as far as world markets? So I guess we just kind of wait and see. We wait and see what's going to happen. It's really difficult to game plan because of the volatility. Oh, I know. I want to. Speaking of volatility, the VIX. So when the VIX starts doing like this, like these really big bars, and this is kind of weird because it's a really big spike, but look at these bars. That's usually near the end of the move, not the beginning. So it's good to see the VIX down. It was down 12% today. I didn't used to watch the VIX much because most of the time it's just a non-event. But when in times like this, I think it's a pretty good signal of what when the volatility is being reduced. Sometimes I'll look and be like, is the VIX up or down today before I'm considering buying or selling? Like if the VIX was as the market was rallying, if the VIX was still up, if it was still green, that would keep me probably from wanting to get much. If the market was down, but the VIX was barely down, or the market was down a lot, but the VIX was barely down that much, that would probably get me to cover my shorts if I happen to be short, and or maybe consider going long. So this looks a tad bit toppy, which would be good for the potential for a rally. Let's look at like the weekly. You can see when it kind of gets into this area. This is 2018, spiked at 50, went down to 10. It's a pretty good rally on the market. This is COVID, obviously, spiked at 85, went down to 14. Really good bull market. These spikes are a little bit harder to gauge, but this spike right here, 65 down to 12 in a hurry. So we've had a spike to 60. Maybe it does the same thing, back down to 10. And if that were the case, you'd have a rally in the market for sure. All right, so stocks, and they're starting to shape up. So here's BMA, which is the Argentinian bank, and you got like if you really wanted to own it, you could almost justify like a little undercut buy. I would wait for more strength, but it's nice to see that coming off the bottom much stronger. GGAL, I like this one better only because Druckenmiller, Duquesne Capital is in this one. And look, if you win in BMA, you're going to win in this one, and if you lose, vice versa. They're going to be one and the same. But I'd like to see a little bit more strength here. YPF was a stock that I did pretty well in here, and then I tried it a couple of times and was unsuccessful. But like, look at the weekly chart. Look at that bar. Look at that support. And a lot of times I'll, fast forward 6 to 9 months from now, I'll be like, gosh, why don't I just buy those bars? Because you'll see it like boom, boom, boom. And then I'll be buying like a cup with handle at 40. And it's like, gosh, why didn't if I like the name, why didn't I just buy that bar? So, but I didn't, and I probably won't, but it's good to see it get support like that. Melly. So, relative strength 91, it's holding up. RS line, all practically new highs. Hard to know where the buy point is, but you're getting stocks that the first step to good stocks is they just stop going down, right? That's step one. So Palantir, stop going down. Is this a double bottom? No, it's not really textbook double bottom from a timing, a length standpoint, but it's got kind of the spirit of one, and it's not, it's, look, it just stopped going down, which is nice. Undercut the lows and jammed back. Hood, same thing. Undercut the lows, jam back. I do own this one. I do own Hood. What else is out there? This name is holding up really, really well. I do own it, but gosh, it's so thin. It's frustrating stock. So it's $30 stock, 500,000 shares, but it trades at like a 50-cent spread. It's a lot thinner than it looks, I think. But I look at that. Look at that relative strength. Like that's the incredible relative strength line in stock builds a base. Look at the earnings line and EPS 99. So I don't know. It's I have a kind of a probing medium-sized position in it, and it's frustrating because it's thin but the market is what it is. So it's going to have a hard time going up because of the market. But so there's you're slowly but surely you'll start to get setups, and ideally there'll be some newer names, some stuff that maybe you've heard of before, but hasn't been, incredible leadership. This one is interesting to me. Again, it's not buyable. I just don't know where you would buy it, but it stopped going down. Look at the relative strength, 96. Look at their RS line, almost at new high. So step one, just stop going down. Step two, who knows? Maybe some kind of base here in a handful of weeks. So today was kind of a good day in that regard, or this week was, because you had some stocks that just kind of stopped going down. Apple, let's go to the big boys. So that's pretty good support. Hard to argue with that. NVIDIA, it's pretty good support week, right? So you're starting to see Tesla didn't quite close as well. This is one I am short, but the volume is coming in. It's going higher. I don't know. I'm hanging on by a thread, but because I'm more long than short, I haven't been kind of implored to cover this just yet. And what? Honestly, I hope I cover it at a loss. It'll be kind of hard to cover the loss based on where I entered, but I hope I give up a lot of the profits, because it would be because the market's rallying, and hopefully the other stocks that I'm long or would get long would participate. What else is out there that's of interest? How about like Meta? Well, very, very Tesla-like, strong, but not top of the range. Netflix. So starting a double bottom, RS line new high. Gosh, really amazing strength. Amazon, it's okay. So, and you can see kind of at the FANG index. This is let's go to is it what's the no, it's FN. I bought the one time. I can't remember is it FNGS? So stopped going down. So do some work. Relative strength within 5% would be a great screen. Just kind of go through the database, kind of see what's out there, what's holding up. Maybe put some alerts on there. And it feels like it's probably days to weeks away before you would really start putting on a lot of exposure, if at all. I'm not saying that's going to happen. I'm just saying that seems a little early for a lot of exposure. But for me, I have a small to medium exposure. Just kind of probing just to see what's out there and what's holding up. All right, so let's jump to the quote of the week. And I'm lazy. I apologize. Working on the short seller thing, the market volatility, and I've been a little bit under the weather. I I just never got around to another quote. So I might have used it. I'm sure I've used this one before. Hopefully it's been a while. So some of you don't remember, but I felt like it really fit. I actually have this taped to my desk right here. Is a reminder that my favorite part of this is anything can be at any price at any time. I'm missing a period. Once you understand that, you realize that you need to have protective stops. So this was a great week for that, to realize that the market can trade anywhere. It can go anywhere. So you have to understand that outsized moves both ways are not as unusual as Wall Street or academia would have you believe. I wish I don't know what it was, but something had like a 20 standard deviation move this week. I can't remember if it was a stock or a index or something. And, it's like supposed to be something that occurs once in, 5,000 lifetimes or something. So the price action that we saw this week was unusual, even highly unusual, but not unprecedented. So you have to know. I mean, even in my short trading life, in the history of how long markets have been around, I've been through these number of times. So it's not unusual. These types of things, this will occur again sometime down the road, and maybe even sometime in the near future is possible. So you have to build that into your model and understand that. And so don't freeze. I'm not saying you have to have a protective stop with your broker, but you have to have some type of plan on where you're going to get out. If the stock goes to this price or the index goes to this price, I'm out. I'm just going to get out, and you can always get back in later. You can always reevaluate. But anything can be at any price at any time. All right. Have a great weekend, everybody. If you're joining us tomorrow, we appreciate it. I'll see you for the event. If not, I will be back the following Friday. Great weekend, everyone. Bye-bye.